YouTube, even though I'm on day 2 of the flu and I feel like crap and probably sound and look like crap too, I'm going to bust one out here for you. And what we're going to do today is look at the big warning signs of the likelihood of acceleration to the downside happening, and I'll give you some hopium as well, things to look for. So by the end of this video, you will not only know the signs on the larger time frames on what are the warning signs, but if things are going to turn around, how to use the lower time frames to figure out, hey, this has the chance of turning around before the larger time frames say things are going to turn around to the upside. So that's what I'm going to cover here in this video. Returning viewers, if you can do me a favor, even though I have a reflection on my sign behind me, you can barely even see it, stop, drop, do what that sign says, hit like for me, and leave me a quick comment, even if it's LOL, you suck, you really suck, whatever. Leave me a comment. It's going to help out the algo so I can continue making videos for you here. And if you're new, here's what this channel does for you. I supplement all the other crypto YouTube videos that you're watching that are primarily fundamental based and news based. And what my channel does is I help you incorporate a statistical understanding of what the heck you're doing when you're clicking around with your money, because those other channels aren't doing that for you. They're only giving you news based and project fundamental stuff. And in current price action, it doesn't really help you in terms of should I click here or should I not click here? So that's what my channel does. Here we go. So if you're new, go ahead and watch to the end of the video. And if you like what you see, go ahead and subscribe, hit that bell so you can stay in the know. And let's cover Bitcoin here. So I'm on the weekly chart. I do not have price on, so I took price off. And what is happening right here is both the 21 and the 10. So this red line is the moving average of 10 candle closings. And the yellow is the moving average, or technically exponential moving average, but essentially moving average of 21 candle closings on the weekly, and they both have a negative slope. So go back in time to, fairly recent past last year, the two fractals that I'm a fan of that I was really hoping would happen here, these two, consolidation before move up, consolidation before move up, the 21 never got a negative slope. Here, so here on the first one, the 10 didn't even either. You just had a wick below, but price always closed above the 21. Here you had wicks below the 21, no closures below, and right now we have a closure below and an opening below. So it looks really bad. The chance of something like this happening is going away pretty fast right now. I'm not going to lie. It looks pretty bad. So if you can also tell, the other times that you had both negative slope on the red and yellow was here, coronavirus dump, kaboom, and the last little failed attempt here, boom, price got continuation to the downside. Okay, let's go to... So this was the run up in 2017 all the way to 20,000, and you had both with a negative slope, and you got massive continuation to the downside, obviously. So like I'm saying, this is not really good. And the whole run throughout 2016 and 2017, the yellow line at worst only got a neutral slope, like right here, but it didn't ever have a negative slope. So this is looking really, really bad. Can you see how the yellow line, it stayed, it's kept a positive slope the whole time, with maybe one exception, where I guess it's kept a positive slope, barely. It barely kept a positive slope, but it kept a positive slope, and price, it did not close candles below, right? Didn't close candles below the whole run. And right now we have a closure below and an opening below, and it's heading down. So the other times where you have both negative slopes, here's another one. This is what current price action looks like. The red barely went above the yellow after dipping below, coming back up, both have a negative slope. Massive continuation to the downside. This looks really, really bad. So take a look at this, right? So remember what this looks like right here. Okay, so take a look at this. Actually, even more than that, let's take a look at the red going below, coming back up barely, and then both have a negative slope, right? So to eyeball that, now watch. Red went below the yellow, came barely back above. They both have a negative slope. This looks really, really bad. Now, how are you going to know if things are going to start turning around? Well, on the weekly scale, if you get a weekly closure, if this turns around this week and closes above the 21, that's a good sign. But what can you do to see this happening before it happens, right? So before you get a turnaround of this candle, or even a closure here and then next week heads up, what are you going to see? How can you get a heads up on if that's going to happen so you can make some trades on that? is I would use the 4-hour chart. So I'm going to put on all the EMAs, and honestly, I'm going to give you a warning. It's really bad right now on the 4-hour chart too. I'm going to take off price. Watch. What do you notice about these EMAs? If you know the order of my EMAs. So for new viewers, this is going to be confusing. I'll give the answer here in a second. But red, in a bullish move, red is on top, yellow's just below, then blue, purple, orange. Red, yellow, blue, purple, orange. That is in the correct order for a bullish move. For upside, right? They are in the right order going up, right? And here, they're all in reverse order. So the smallest EMA, the 10, is below the 21. The 21 is below the 55. The 55 is below the 89. The 89 is below the 200 EMA on the 4-hour. That's really, really, really bad. And in bullish moves, okay, if I could take off all but the orange one, in really bullish moves, price typically barely goes below the 4-hour 200 EMA in bullish moves. And I'll show you here in just a second here. So in bullish moves here, you can see price often comes down to it, rest on it, or wicks just below it before continuation, the 4-hour 200 EMA. So you had wick below, move up, below, move up, below, move up. Then you started getting, then you started consolidating on it and you lost it, right? It lost it. This was a big warning sign, right? So not only did price get below here, but look, look when the EMAs all started tanking below the 200. So they were all in the right order here, barely squeezing down, and then they just tanked, right? So look at what's going on here. They were all squeezed right above it with red on top, then yellow. I think purple might have stayed on top of blue. So not all the exact correct order, but they got cramped up, then they lost it, and now they're all in the exact wrong order. So to get a heads up on if this is going to turn around, what you're going to need to see here is I would honestly just use the 10, the 21, and the 200 is you need the red to get above the yellow, and then the red to work its way above the 200 EMA. So once that starts happening, that will give you, so especially the red getting above the yellow on the 4-hour, that's going to be your first clue that the week will close back above somewhere the 21 weekly moving average, which is sitting around, actually I kind of forget where it is. Where's the 21? At 43.3 right now. So the 4-hour can give you the lead on the weekly, and the weekly really is all that matters right now, because if things are going to recover, you need a closure above the yellow line, period, on the weekly. And so going to the 4-hour to try to get a big fast hint or a faster hint, okay, the red's coming above, is it going to stick it? No, it didn't. So it actually has a downward slope right now, so it looks like pressure's down. But if you can see the red getting above, then works its way up here, that's going to be your first sign of hope that things are going to turn around. And if you don't see that happening and the red can't stay above the yellow, I mean, the price is going to accelerate to the downside. In my last Bitcoin video, I gave you 3 very specific targets that I believe are the most probable targets. So you watched my last Bitcoin video because, price has been boring the whole time. So if you haven't seen that, go watch that one. It's my previous Bitcoin video. Should, just go to my channel and take a look. But this is looking really, really bad, but hopefully now you know what you need to look for on the weekly. The only thing that really matters right now is a closure above the yellow line, which is the weekly 21 EMA. Do you have to have it yellow? No, you don't, but you need to be looking for that if things are going to turn around, period. There aren't really other options. Like, you need a closure above it or you're going to accelerate to the downside. And using the 4-hour, you can get the hint on if that's going to happen sooner or later, and it'll give you also, the 4-hour will give you the heads up if you're going to get just straight up continuation to the downside, which at this point in traditional trading, not thinking like a whale, but traditional trading, that's what looks like is going to happen. This is looking really, really bad, and price could really melt to the downside here. It looks pretty bad. Now, if you are a daily fan, what you need to look out for is really, you already had the red cross below. Let's take off the 21. You already had this squeeze, and price didn't get much continuation to the downside. But once, and what I mean by squeeze is red squeezed price below the purple. See that? Red squeezed price down, but you're getting ready to have another squeeze, which will be much, much, much more significant in terms of continuation to the downside. So on the daily chart, if you want to use a third way to view things, is if this red line can't stay above the orange, right, and it's coming up real soon, like it's going to happen soon, that will make price really accelerate to the downside, and it's about ready to happen. So on the daily chart, the 10 crossing the 200 is really, really bad. I mean, it's super bearish. And again, the only other times that happened recently were those 2 times where you got continuation to the downside. The fractals that kind of got close, they stayed well above it. And right now, price, I mean, in order for this to shape up, or for this to shape up, the daily candle needs to close above the 10. So on the daily chart, if you don't see a day close above 43.5, I mean, this is getting really bad, folks. So hopefully you're holding tether. And within my Discord and Patreon community, I have links down on the bottom so you can check that out if that's something of interest. We had been selling our altcoins at around Bitcoin 44,000, skimming them, trying to hold some tether for anticipation for a move to the downside. But if you're fully locked into position, I mean, just be aware that if you plan to hodl through this could take a long time to be back at break even from wherever you bought your stuff. I mean, this could take quite a while, because if Bitcoin comes down to to the 32K level, it could take. I mean, it's easily going to take 2 months to recover to get back above 40K. I would guess between 2 and 6 months for price to be back in the area that it is now. I mean, it'll be a while, and it can wash out a lot of people, make people lose a lot of interest within Bitcoin and cryptocurrency. So just a heads up. But I'm telling you, if that happens and you're holding crypto and you have capital on the side or something, like, a lot of times when people are leaving crypto, that's the time to get in it, really. And that's how you make money, really, is when people and everybody else is selling and things are looking like, very, very abysmal. That's typically when you get the best prices in crypto, for that when the market recovers, you'll be really far in the green. So I'm not for sure what to suggest for those who are holding zero tether, you're fully in position. But if there's a way that you can, figure out how to pick up altcoins at a lower price, if Bitcoin really does accelerate to the downside, that could really, really potentially change your life. And the time that I would pull the trigger is when you have 2 higher lows on the 4 hour is when I would pull the trigger, because you could just keep getting, this could keep going down, folks. And so on the 4 hour chart, without any EMAs, whenever it gets acceleration to the downside, I would wait for a second higher low, something like that. And that would be the very earliest I would try to, pick up my altcoins if Bitcoin forms 2 higher lows on the 4 hour. So that's my heads up to you on there. Hopefully you enjoyed what you saw. And if you're new to this channel and you liked what you saw here today, even though I'm sick, sorry, I probably sound bad, but go ahead and hit subscribe and the bell so you can stay in the know. And I also publish a bunch of altcoin videos so you can know what you're doing with your money as you click around there as well. So go ahead and check out those, and we'll see you next time. It just got typified, sort of.